Awesome. Okay, I think you guys are able to see my screen now. We're good to go. We're going to do a little bit of analysis of what's going on here. Okay, I'm going to let everybody come into the room. We're going to do a very brief webinar today, guys, because I'm a little bit under the weather. Okay, so I'm going to review basically where the state of play is in all the markets right now on a very short term, very long term. See if you guys have any questions. Because I can't really talk much for some reason. I just woke up with some kind of a bug. So my apologies. Anyways, equities are very quiet this morning on the open. We really don't have much going on. Everybody's kind of marking time right now. The big story this morning is really oil. That's what's moving throughout the morning. We've had a move from 105 to 107, and the reason why oil is bid right now on a very short-term basis is there's new fear that the Europeans aren't going to be able to get Russian oil because Russians are demanding rubles. That's obviously a breach of contract, but the Europeans don't have rubles, so there's just sort of fears of shortage and perhaps rationing of energy prices. That's why you're starting to see kind of a very strong bid, just even on the 1 minute chart. If you go on a longer term chart, after the big spike over the last couple of days, we bottomed out on the peace, sort of peace spike to the downside at 100, and now trying to consolidate here. This 105 to me becomes the new support level if you're trading on a midterm basis. And obviously, if we start to retake, really, it's a kind of a 105, 110 trade. If we retake the 110 and hold bid, that really puts oil back into a very bullish posture and suggests that we could go back up to the 116s. So we're still very much in consolidative mode with an upward drift here. We did get sold at the 108 level earlier today. That seems to be the resist point. But it's certainly, North America hasn't really come on board. I think if North American traders come on board, then we have a reasonable chance here to push this through the 109, and that's where it gets really interesting as far as the move higher. As far as equities go, on a more longer perspective here on just the hourly charts, it's still a very strong bid up to the upside. We can see that all of these green waves are buying waves, and we've just had one buying wave after another buying wave, after another buying wave, with very little retrace. This 15,000 level that we took out yesterday is kind of holding. If we hold bid at the 15,000, you have this classic burst up consolidation, burst up consolidation. If you study the price action over the last 10 days, we've basically moved in equities from the 14,000 level to went out to about 14.4, consolidated, held the 14,000, went up to 14,500, essentially held 14,400, kind of held support here. Went up to basically 14,800, came back down to hold above the 500, came back up now to the 15,000 and really 15,200, and now the big question is, can we hold the 15,000? I think as long as we 15,000 is definitely a very good hold. As long as we sort of don't touch 1480, because they could easily test the 14.9. It still is a very powerful upside trend in Nasdaq, and Nasdaq is the weaker of the two, because I think the Dow in many ways is a stronger bid. We had a little bit of a selling wave here midweek, but the Dow has just been a climb from 33 to 35 in very similar stair-step fashion. So we took, went to 33, went to 34, came back down, held 33, came back up you know, went to 33,400 and basically held 34,000, came back up to, you know, almost 35,000, had a little bit of a draft, but held the 34,000, and now above the 35,000, and now of course the 35,000 is the key support in the US 30. So it's 15,000 Nasdaq, 35,000 as key support in the 30. In oil, it's the 105. That's the oil trade that's kind of holding. The only trade that's just not clear at all, and I don't have very strong vibes about it either way, is gold, which made a big round turn circle, then really broke hard on negative you know, time change, negative news here on the peace dividend, and then you know, and really hasn't, just kind of recovered the 1900, 1920. But to me, if you want to get bullish gold, you really need to see it recover the 1950 level. Like that would be, if we can recover, you know, all of these levels to the upside, I think that would be good. For now, obviously, this is the point of support. So if you're looking to build a position, and you know, you think that this is pretty much sold out, then anywhere down to the 1900, you're a buyer with a stop at 1880. That would be, you know, that would be the double bottom. You can start to accumulate this if you think this was a spike low and we move up. It's really, honestly, gold and oil are the pro-war trade, and if you think the war gets worse, the conflict gets even uglier, and there is even greater pressure now because you're going to get this kind of squeeze on energy prices, and you know, more atrocities happening in the field. That's all creates a very negative global structure. So obviously that provides a positive lift for risk-off asset like gold, which is going to trade pretty much in tandem with oil, you know, in many ways, I think, as the trade goes by. So those are the four primary assets, and we can take a look at FX separately. Actually, you know what? The other asset we want to take a look at is just crypto. So let's just take a look at bit on crypto, which is interesting because Bitcoin definitely, you know, everybody who I interviewed on the trading battle was basically saying to me that the crypto was a 35-45 trade. You know, it's kind of like 35 was the low, 45 was the breakout, and we did take out the 45. And you know, and if you look at crypto, it's a very similar signature of Nasdaq and Dow, really similar actually to Nasdaq in the sense that it's a very risk-on buying wave flow. So you had this big buying wave through the 42s. We held the 40, you know, the 41s. Then you big buying waves through the 45s. We hold the 44s. The big buying wave through the 47s. We kind of hold right now the 46s. I think this 46, you know, 45 is a key thing. And now everybody is gearing themselves up to see if we can take out the 50. So definitely, you know, positive bias in Bitcoin, and you're just kind of accumulating here with a stop below 46 on the assumption that we have, you know, greater waves to the upside on the risk on flows. So now let's take a look at FX, and I want to go. Let's go through the majors first, because there the situation is kind of very different. You know, we're starting to see lots of different things. I think on the FX, I really want to look at the 4-hour charts against monthly buys and sells. So let's just go look at the monthly highs. And you know, what's interesting is cable, which was super bearish, lots of selling waves, you know, fresh lows to the 130, finds support at 130. What's impressive here is that it looks like it may have found a higher double bottom. If we get up to the 32s, that certainly gives you a much bigger dose of comfort that we have bottomed at the 30s, and we have a higher possibility here to go to 30, you know, 33 as we try to recover the midpoint of the of the month. Mildly bullish, you certainly have a chance to come back down, but with the buying flows, or what the chart is kind of showing you, is that buyers bought the second dip higher, so they should be a little bit of a bias to the upside. Euro is very interesting because it's really yesterday was actually we're in trading battle, and there were a couple of traders who were like, I'm going to get short this move, and I was like, I don't think you want to be short this move, because when you look at the euro, it's actually a pretty bullish looking chart. You have a series of higher lows. The 108 spike was tested, and then you just, everybody bought them, and they bought them higher every time. Yes, this 1150 was, oh God, excuse me, I'm just a little bit under the weather here. 1150 was a spike high, but we broke it, and the fact that we broke it today in a pretty strong buying wave is a sign to me that we're likely to go higher rather than lower. So now this 110 becomes support, 110.50 becomes support, and the bias in the euro very much to the upside. Conversely, the dollar yen trade, if anybody listened to my trade or fade weekly thing, one of the things that I was very, very confident in is that it was time to sell the yen crosses, strictly on the fact that we were just grossly overbought. We have these, these massive buying waves. We hit monthly highs. We hit this very, very important 125 level, and I did get short right around here. I've already taken my profit on the first half position. Now it's just consolidated. Now you're in no man's land. You can certainly have 100 points to the upside here on a dollar move to the upside. We could test the 120. It's a very if you're in trade, you're just managing it. If you're not in trade, this is not a place to get involved. There's very, very little clarity here as to where it goes. But this was a very clean, clear trade, from earlier in the week, which has worked out very well. The other thing that I was also very cognizant of is the short on the commodity crosses, especially of New Zealand and Australia, as those safe harbor trades, I think, are going to start losing their luster. And so the 70 level in Kiwi, very much. I mean, I think Kiwi now is a very interesting short here. These levels, because you have little risk. You basically have risk to about 70.50. Because once it gets through there, then you're clearly wrong. But I think there's potential here for a lot of congestion, as again China becomes a much greater worry than not. We'll skip the Swissy. Let's look at the other commodities. Dollar CAD grossly kind of over sold, and I thought had a chance here to bounce, but we don't have I don't have a green candle bounce here, so it could be another couple of candles before we get any signal of a bounce. But still, this level of 24.50 seems to be the near-term bottom. In Australia, as I said, 75 was definitely a short. This is both basically New Zealand is a short from 70, Australia is a short from 75, and I think we have pressure down to 74s as both of these trades are grossly oversold. On the crosses, I said it's time to sell the yen crosses, but the question is which ones? And I think clearly the yen crosses that are best to sell would be the commodity yen crosses. So Aussie yen, Kiwi yen, those are the ones that I think are more vulnerable to a deeper correction. Euro yen, because of the euro strength, and pound yen because of the pound strength, have already corrected. We've had this big correction off the highs, but now could be a lot more choppy. So that's sort of how everything sets up, guys. If you have any questions, let me know. I don't see any questions here in the room. The main impetus for this week is really going to be non-farm payrolls end of the week. We'll see if the risk trade continues to go, and of course the negotiations in Ukraine. As far as the main assets go, let's go back to the indices. As far as the main assets go, as I said, really the big story is today is oil on this European news, and whether we were able to hold bid on equity indices here at this 15,000 level, 35,000 level in the in US 30 and Nasdaq. Those are the key levels that we want to be participating in as the day progresses. Okay, I know we're sort of at a different time this week. I want to thank everybody for hanging out with us all month long. You're welcome to come join us at BKForex.com. I'm happy to. You're welcome to watch us on our BKForex YouTube channel, where I'm going to post the weekly commentary all week, every single week, so you can look at our trade ideas. And I want to thank everybody for hanging out with us. Unfortunately, I have to leave a little late because I'm really not feeling well. So I will see everybody a little bit later.